Hey everybody, Hop Sauce here. I'm going to show you how to sell a covered call in a down market. I'm just going to share my trade that I made yesterday. I made 3 trades yesterday. I'm just going to show you this one. And so, something to remember about the covered call strategy is that the risk to this trading strategy is that you can lose on the upside. If you sell a call option at a certain strike price and the stock goes above that strike price, number one, you get called out. And then number two, you don't you're out of the position. So you don't capture any of the gains if it goes up. Okay, so as I matured in life, I like the strategy that the risk is losing a little upside to as whereas you're not risking a bigger loss, right? So it's a safer play. So I'm going to show my position yesterday. Now we're going to talk about a stock called SoFi. Okay, SoFi is a company that is disrupting the banking industry. Okay, and so they have a ton of different banking products. They do home loans, they do equity loans, they have bank accounts, they have credit cards. Most all the products that banks have, they have. Here's the difference. There is no brick and mortar. There is no real estate that they own. There is no branch. There is no physical space to where you go in. They run on AI. They have wonderful customer service. Anytime I've called, you get a hold of them right away. And so that's why I like SoFi. That's one of the reasons why I bought the company. And I'll show you my play. So I actually purchased this company back in July. This is their price chart. Let's scoot back here a little bit and kind of take a look at approximately where I did get in on this thing. I bought it at right around 1630. Okay, so these are some old lines that I had. It's nice because when you're above that spot that you get in, like up in here, you sell call options. They expire, you sell another one. Look, we had a big dip right here. Then this thing ran back up, and I sold another call up here. Okay, so on and so forth. So that was back in this is back in December, but I did purchase this back in July, and I've written probably about 6 or 7 calls on this one company. Okay, so with that said, let's go to where we're at right now today. And this stock is trading down at around, where's the front of this thing at? Here we go. 1227. Okay. So what I did yesterday, I was looking at this position. And so I wanted to see, I went back on my notes. I have spreadsheets on all my trades, and I had figured out that I've actually made $5.70 on premiums. That's over, what was it, 7 or 8 trades. So I looked back and I was like, okay, I got 8 cents on this trade. I got 71 cents was the highest on another trade. I got 29 cents on this one. I got 54 cents on another one. So I added those all up. It equaled up to $5.70. So I am that far ahead with this position. And so if it's currently trading at 12.29, I added that $5.70 and I'm like, oh, okay, if I get called out, I'm still in a profitable position. I'm going to take a little risk and see if I can gather a little bit more premium and sell a call option below the price point that I got in at. This is a risk. This is a downward risk. Never buy a stock, and if it just on your first trade goes down, don't sell a call option down there. Okay. Usually the way the strategy works, right when you purchase the 100 shares to sell a call option, you do it immediately, right? So you have this parallel position to where you have downside protection, 50, 60, 70 cents, whatever it is. So if that thing drops down, you're still at a break-even point, okay? This, as I just showed you, it ran up, and I sold calls all the way up, and it accumulated a total of $5.70 of premiums that I brought in. Okay, so what I saw yesterday, right in this area, there was a little run up the last couple of days, right? So we were up at this point right around 1387, so there was a little bit of strength. We call this it's up towards that resistance level. I'll just draw a quick line. I won't go back, but this point does hit further back, so I considered that a resistance level. Okay, and it bounced off there, right? And it looks like it's coming down just a hair. So I'm like, you know what? That might be the top for this little push. I'm gonna go check some call option prices. And so I got on I have Schwab right now, and this will be a different video, but I'm trading this particular trade inside my Roth IRA account. Tax-free money. It's an amazing thing. I'll do another lesson on that. But you can make this trade in any individual trading account. Robinhood. This used to be Scott Trade back in the day, and then it turned into what other company bought that? I was forgetting the name of E-Trade, bought Scott Trade, and then Schwab came in and bought Scott Trade. So I just had the same account this whole time. I didn't pick Schwab. They bought the company that I use, so that's where my account is. And so with that said, I looked at some of the strike price premiums, and I found one. We were trading at, let me pull up my little spreadsheet right quick here. Here is this was yesterday, SoFi. Okay, 1650 is what I purchased this thing at. The stock was right around that 1307, right in this area, right when it dropped off that resistance. So I'm like, okay, I'm going to sell a call. I got lucky because look, it dipped down. And so it would have been more risky if I sold one down here. You don't want to sell a call option on weakness. Okay, after it drops like this, it was kind of moving sideways. So I'm like, okay, I'm gonna see if I can pull in a little premium. Remember, it's similar to owning a piece of property and collecting a rent payment is what we're talking about here. Okay, so I looked on there, and the 15, again, that stock price is at 1307. Looking at 5 contracts, and back in July, my entry point, I put up $3,326 to buy 500 contracts of this particular stock. So now I have some option to sell call options when you own at least 100 shares. Okay, I went down. I usually look at the 2-week premiums, but I decided to go down into the 22-day, and I found the strike price at $14 that was bringing 37 cents. So I'm like, okay. So that's when I went back and I calculated that over time since July, I had brought in $5.70. So I added that to 14 because if I get called out at 14, I wanted to see if I'd still be profitable. And sure enough, I was. Okay. So I'm like, let's go. Let's do it. You got to remember, to make money when the market's moving down this is one way to do it. It's a leverage against a downside market. It's selling these covered calls. Okay. Brought in 37 cents. The premium for 500 shares on 37 cents was $185. I'm like, all right, I'll bring in $185. Again, this 30,326 that you have to put up basically is collateral. That was back in July. So I've just been doing this same method here, pulling in a couple hundred here, a couple hundred there, a couple hundred there. It's a dream. And in the next, if you're interested in what a Roth IRA account is, that'll be the next lesson. But you can, at 59 and a half, right? This is the retirement plan for me. You can pull money out of this Roth IRA for free. It's insane. You're making money that's non-taxed, and then when you go to pull it out, non-taxed. It's a win-win. It's when I started to learn this, it was unbelievable. Okay, so that's why I'm focusing on this here. Oh yeah, I gotta update that the Avery Pro. Okay, so that's the point. In 22 days, on April 17th, this call option is going to expire. If it is at $14 or above, I'll get called out. Now remember, I purchased it at $16.50, so I'm going to lose $2.50 from my initial purchase on this thing. But guess what? I just went back and shared. I made $5.70 times 500. I think it's like $2,800 on my $3,326 investment. Crazy percentage. Crazy percentage. So, on this one trade, for 22 days, it expires on April 22nd. What is that? Boom, 5.5% in 22 days, ladies and gentlemen. I will take it. I will take that all day long. Again, if you annualize it, it starts getting kind of exciting. This strategy will not get you rich quick. This is a slow and steady, just a focused strategy on how to pull in some premiums on a down market. Now, if I do get called out at $14 real quick, over time, like I said, I got some notes here. I had brought in 2,850 divided by my initial 3326. I mean, come on. 85% on my original message is where I'm at. 85%. Okay. So if I lose a couple of dollars and get called out here, I'm happy. It's only going to drop down, a few percentage points from there. And so like I said, I brought in some more premium. It's a beautiful strategy, slow and steady, small little pieces of revenue that can come in. Hope you got something from that today. Tune in tomorrow. I'm going to be just my daily trades. I have a couple other that I did yesterday that I might share tomorrow, but I want to talk about that IRA account tomorrow as well. And if anything exciting happens in the crypto market that we need to discuss, I'm going to bring that to you as well. With that said, everybody, sunshine's coming. It's in my area. It melts the snow, so the river level starts to come up. I might be doing some river surfing in the next day or two. That level coming up, the wave gets better. So let me know in the comments if you want me to share that experience. It's kind of not what this channel is based on, but it'd be kind of fun to see, like I talked about, creating that homeostasis to do things outside of the office to distract you from the rigors of life. Okay, we'll say it like that. So, all right, buddy, enjoy the rest of your day. Have a good one. Peace out.